Good afternoon, everyone. My name is Kevin Jover, and I'm the CEO of Aurcana Corporation. We have two projects, both located in continental United States. The Revenue Virginius mine is located near Ouray, Colorado, which is about a 7-hour drive from Denver, easy to get to. The second project is the Shafter project located in Texas. It's fully permitted. It has a 1,500 ton a day mill in place. But it's at a PEA level, and we need to do some more work on that before we'd be ready to put it into production. It needs some additional drilling, and it needs a feasibility study completed, but it is a project that we will probably bring online in a not too distant future. Our focus right now is on the Revenue Virginius mine. It is fully permitted. We've just completed investment credit approval for a $28 million debt facility for the pre-production financing of the project. We have a full management team in place. It is, of course, precious metals, silver predominantly, but with some gold, lead, and zinc credits. Feasibility study is complete. It was done by SRK Engineering, and we have development underway at the site right now. We have approximately 73 people working out of a total workforce when we're at full operation of 140. We're low cost to production. On a silver equivalent basis, we're about $11. On a pure silver basis, we're about $8 using the base metal credits to cost. There's a mine, there's a mill, all the infrastructure is in place, roads, power, everything that we need. And this is a project that has significant upside potential as well. Just a little bit on Aurcana itself. It's a very high-grade operation. As you can see, the Revenue Virginius mine is over 37 ounces per ton. Our all-in sustaining costs are very low, yet we haven't gotten credit for that in the market yet. And you compare us, say, to an Alexco, which is probably the closest to us, we're only about half their market cap. So I think we've got some way to go in the market. Shares outstanding, 227 million. We have warrants outstanding of 95 million, all in the money, 13 million in cash right now, $207 million market cap, and we have a $28 million facility that we hope to close by the end of November. The feasibility study, just the highlights of that: 21 million ounces at 37 ounces per ton. That's about a 7-year mine life. Our milling rate per day is rather low, 270 tons, but that gets us at 3.1 million ounces a year. It would be our intention to increase that production rate up closer to between 4 and 5 million coming into the second year once we get ourselves up and running. We would look at increasing that. The mill, by the way, is designed for 500 tons a day, in excess of 500 tons a day, and we're starting up at 270 tons a day. So we do have some room for organic growth. It really only means bringing on a third stope. So we'll be looking to do that. But first, what we want to do is establish our metallurgy, our cost profile, our productivities, etc. Get ourselves a good foundation, and then we can start and take our milling rate and our mining rate higher. Picture of the site itself. It's very small footprint. The mill is actually located underground. It's out of the element. We're up at fairly high at 10,600 feet above sea level. That's about 3,000 meters. We are currently, we have a number of contractors already working. We've completed our passive water treatment system. So for the full operation, we're pretty much done with that. We're working on our winter tails operation. Our summer tails operation is right here area. We have enough tailings capacity for all of our known reserves. We're expanding the change room and the offices. We've already poured the foundations for that. Our marshalling area is an enclosure for the underground area. That's the foundations are poured for that. The reagent building as well, where the reagents are poured for that. We're just waiting on the fabricated building. But these are all seasonally dependent works, and we intend to have them finished before the snow really gets to fly up there. So we want those out of the way so that there's no bottlenecks to going into production come the winter time. A couple of pictures of the site itself. This was taken mid-September. The snow comes early up there, but it doesn't stay for the most part. This is the entrance to the portal. We're a track mine. This entrance goes in at the 10,600 foot level. And this tunnel is about 8,000 feet directly into the mountain. This is an Alimac raise climber. We're working on 2 raises right now, the number 1 and the number 2. The number 1 raise is for men and materials, and there will be a hoist or an elevator if you want that will take men and materials up because we're going to be mining above this level that you see right here for the most part for the first few years. So we need to be able to get men and materials up there quickly. There'll be 2 more raises that'll go in. One will be an ore pass coming down. One will be a waste pass coming down. A couple of pictures of the mill itself. The mill, as I said, is underground, crushing plant, grinding plant, processing plant. We make 2 cons, a lead and a zinc. Silver, gold typically goes with the lead, minor amounts of gold with the zinc itself. Just the area of the San Juan Mountains that we're in, there's been many, many mines in this particular area over the last 150 years. We are just one of them. This mine, our mine, it ran for some 40 odd years, produced 25 million ounces at over 60 ounces per ton. So we're in a very good spot here to be able to consolidate some of the regional plays that are here. Just a quick brief look at our future. This gray area is what was mined out. This pink and blue is what we will mine. That's 7 years here. We are open to the north. This is pristine area, and we're open to the south right here. This is the Virginius vein. We own 18,000 feet of the Virginius vein. And right now, all the known reserves we have are only on about 4,000 feet of that. So we also own 8 other veins, the Terrible Vein, the Atlas Cumberland, the Wheel of Fortune. We own all of these. They've been in production in various times over the years. But right now we're focused on the Virginius vein. So just in summing it up, we've ordered all of our long lead time items. We have about 73 men, or I should say workers, on site right now. We've rehabbed are in the process of rehabbing our secondary escapeway. Surface infrastructure is all in the works. Waste dump, wall reconstruction is done. Our passive water treatment is completed. Access and for our winter tails dry stack is nearing completion. We are targeting in the second quarter of 2021. Assuming we get a positive start from our board once we get our production financing in place. So thank you very much.